Alrighty, what's going on, everybody? Happy Tuesday. Do me a favor. Let me know in the chat real quick if you guys can hear me. Make sure my mic is working properly, and we'll get started here. Perfect. Awesome. All right, let's do it. Let's get into it. Tuesday. Had a little bit of U.S. news come out. We definitely had some information came out last week as well. So definitely presented some key movements in the market. So kind of go through what I'm looking at, kind of looking ahead. Hopefully, most of you guys have started to, if not already, you've started to see that the March rate reduction by the Fed is pretty much off the table. I haven't looked at the revised predictions, but I would imagine we're somewhere in the neighborhood of high 80s to low 90% that it's off the table. And if that's the case, obviously, your bias should be looking at that accordingly. I said last week that I'm going to, until we get at least until the data starts to support that we are looking at a sooner than later rate reduction. I'm really just going to be playing in between the hash marks on some of these currencies, specifically dollar crosses. When it comes to indices, obviously, there's a lot of outside factors that are being played. There's a lot of politics behind it. Obviously, more stimulus into the economy, the greater the push on indices to the upside. We are in election year. There's definitely a lot of stimulus being thrown around. If you guys don't know, especially those that don't live in the U.S., you really wouldn't be following it, but key legislation overnight was approved, which ultimately gives a little further stimulus on the forefront for some of the data that's going to be presented over the next like Q2, Q3 going into the November election. So a lot of politics at play. Obviously, all eyes are going to be on the Fed. CPI data comes in a little higher this morning. The revisions on Friday showed a little higher move year over year. So that's really where the bias for a March rate reduction are kind of off the table. Yeah, so let's dive into it. Going into, bear with me, I'm going to be drinking some water because I just came back from a run, and yeah, the AC in my house hasn't really caught up to where my body temperature needs to be. So we'll drop this bad boy down to 70 real quick. All right, there we go. So when we look ahead, right, starting off with some fundamentals here, we have the key information obviously coming in. Our month over month creeped up to 0.3%, which isn't too bad. I mean, seeing that last month came in at 0.3 as well. The big one was core, right? Core came in at 0.44% higher than last month. And of course, year over year, we're still seeing a decline, right? And that's where a lot of people aren't paying attention. So yeah, they were projecting 2.9, but listen, it was 3.4 last month, and we're down to 3.1. So on the inflation front, the Fed is still doing its job, right? We're still seeing a decline in inflation. We're just not seeing as projected on that month to month, especially the core. The core is the one that really hits it. So that's something I'm really paying attention to. Is it changing my bias on if the dollar is going to continue bullish? I mean, the dollar is going to maintain its bullish structure until the point that one of two things happen. Either we get our first rate reduction, which is going to happen before the second thing. The second thing is going to be a change in presidential power. So, you go back, do your homework, take a look at when Republicans are in office, what the dollar does, and when Democrats are in office, what the dollar does. So I'm sure everybody's watching what the Donald's doing. He's winning some key battleground states. I take that back. We're not saying battleground states. He's winning what he's supposed to be winning on the forefront of the nomination. So, does the bias for the rate reduction change your bias regarding the dollar? Does the bias for the rate reduction change your bias regarding the dollar? What do you mean? Yeah, what do you mean by does the bias for the rate reduction change your bias on the dollar? I thought the expectation was a bearish dollar. Yep, the expectation is a bearish dollar. Yep. Yeah. We won't see big sellers coming in until we get closer to a rate reduction though. So like last week, I started looking for uh, in between the hash marks some buys in discount, and obviously if we got into premium, some sells. I was definitely looking for sells on like Euro USD if we would have gotten up into premium, which we never did. So the shorts I was attempting to do, like this morning pre news, just I missed me by a little bit, but I was able to at least catch the buy out of Frankfurt into my sell area. But yeah, the expectation is we will be eventually bearish, but we haven't really broken anything quite yet. So you know until I would say until we get close to the point where you see short sellers coming in on the dollar, you've got to maintain bullish dollar all the way. Um, and if you, and this is why I was speaking to someone this morning about it. This is why I don't correlate the dollar index and indices, because can you have a bullish dollar and bullish indices? And my answer is yes. You're looking at it. The dollar's pretty bullish right now, and so are indices. Right? You have to understand where the money flow is happening to understand the correlation between the two. So okay, so we had CPI data come out. I'm really, I'm not, I'm not saying that we're not going to get a huge movement out of inflation year over year on the pound. I just don't think we're going to get a change in direction. So, and we'll take a look at what the pound where it's at. I'm eagerly looking for buys on like GU. So I'm bullish on the pound, and we'll kind of look where price is at currently. I'd like to see if we can build something out of it. I took a buy this morning, ended up getting clapped out, but it's whatever. It came into the area. I like the accumulation we saw. It was in a point of interest. I'll do it 10 times out of 10. Um, Going in, we're also looking at, we have some Australian news coming out, which hopefully helps. I am looking for shorts on the Australian dollar and Kiwi dollar, so I'll kind of go over that. Going into Thursday, which is what I'm really keeping my eye on, and we have some ECB conference coming out. Lagarde's going to be speaking. And, I'm really not caring about too much about core retail sales, but we do have manufacturing index and Philly Fed index that's going to be moving indices. So Thursday, I'm definitely going to be watching. And of course, Friday morning PPI, I honestly, I have no intention of trading Friday morning. I'm flying out Thursday, going to be at a volleyball tournament Thursday, Friday, Saturday, Sunday through Monday. So, but I would imagine that PPI is going to mimic what we saw on CPI data. So really the brunt of it was the CPI data for this week. What I'm really going to be paying attention to going into next week is going to be all the euro data coming out of inflation, right? And seeing if that kind of coincides with it. Pay attention to the continuation of what's going on in the Chinese economy. That's further fueling why my bearishness on like AU and NU are kind of continuing. And the big thing is going to be when they release meeting minutes, once the analysts get their hands on it next Wednesday, kind of just seeing keywords that the Fed's using. I would imagine we're going to see the same status line that Powell's been talking about. And, kind of leading into what we saw this morning, a lot of these Fed speakers have been talking about how the March rate reduction is really not in the cards right now. So pay attention, follow the analysis, and, plan accordingly. So that's really what I'm doing. My game plan is play with him in between the hash marks. I'm going to play ultimately the market cycles that we're starting to develop. We really haven't had a change in direction in a minute. So while we're kind of just dancing around, I'm going to take advantage of these quick opportunities, and, going forward, that's kind of where I'm going to be at with it. So we'll jump over the charts real quick. Bear with me. There we go. All right, so we'll jump over to the charts real quick, kind of show you what I'm looking at. All right, so we'll start over here on the dollar. All right, so where are we on the dollar? And realistically, on the dollar, we're in the middle of nowhere still. My anticipation is we're going to do one of two things. We are either going to continue to the upside, getting up into this area of supply, or we're going to retrace back into area of demand where I ultimately want to see price come down to. I would like to see whether or not we do either of these. And of course, the third option would be we just come back into this morning's news. And ideally, what I'd like to see is a shakeout of everything. So on the short game, the three real ways that I get into a trade on this are we come back down into here. I've got my alert sitting around the 104,200 level. We start to see buyers coming in. I really don't care. None of this holds anything for me. Yeah, sure, it's order flow. I could care less about order flow. What I'm going to be looking for is, do we accumulate here? Do we sweep all of this out, accumulate below it? Or do we come back down to like this 103.35 to 103.03 area? These are going to be the 2 points that I'm looking for. So in order for me to get into a buy, it's going to be coming back to play into here, or are we coming back into where we spent, those 2 weeks in accumulating some buys and mitigating out? So overall, that's the game plan for me on the dollar. I'm looking to see if potentially over the next like 48 hours, we can get price at least back into here. And if so, that's where I'm going to be looking for potential buys. And again, if we sweep it, I could care less. That'd be my shakeout. Look for buys below it and trying to take it higher, or coming back down into where we know we have some buy orders and demand for sitting. That's going to be really the two things I'm going to be looking for. Came right into 50% of Frankfurt's last push down. All right, I don't know what we're talking about. Okay. Yeah, so that's what I'm going to be looking for. Ideally, like I said, I'd feel better if we end up sweeping all of this out and accumulating below it. Jumping over to EU. So jumping over to EU. Again, this is what I'm looking for, right? I'm going to be paying attention on whether or not we can get price to come back up into here, which is maintaining my market cycle. Or if we can't get this premium, the first area I'm going to be looking for is going to be whether or not we can see price, coming back into here. So this is what I'd like to see. Is I've got my alert sitting right around here. If we do something here, great. I will have limit orders out of ultimately this distribution. I won't activate them until we get price up there and I start to see ideally what time we come in and how that's going to play out. So I did take a buy this morning simply out of London price action, came back to mitigate the 80% of yesterday's New York accumulation. I was trying to hedge in out of here. It just sucked. This came in way too close to news, and I just really didn't. I didn't want to put the limit order in. One, I didn't want to get stopped out by my broker on spread, and it would have missed me anyway off that 50%. So what I'm personally looking for, though, is do we come back to mitigate the redistro? And I'll play price action out of here. Or do we sweep out the high of news, which is, obviously possible. This is what's maintaining our leg in this move here. So the limit orders for me would be something I'd be interested in playing. All right. So EU for me, pretty clean. I like how this is shaping up. The one thing I do have to be cautious of is we are in an area of demand. So there we go. We are in an area of demand. My anticipation is that this is just going to be an area where they can ultimately use buyers to their advantage to just creep price back up. Remember, this for me is the lowest form of order flow that I care about. When we look at the bigger scheme of it, right, this becomes my slingshot. This is the leg of the overall structure point. All right. So not anticipating that we're going to get anywhere up in premium. I'm going to play the short game, right? I'm going to look at first where we are in that order flow and play the order flow from itself, right? So we are in a redistribution. We've confirmed it. Obviously, supply up here is what's maintaining that lowest form of order flow, this becoming the cause of that break. So, POI number one, and then of course the extreme POI number two. So that's what I'm looking at. Realistically, if we trade above this, then we come up here. But by that time, we're going to be into probably the end of next week for that. So, for this week's game plan for me, it's going to be simply, one or two. That's how I'm looking at it. All right. So EU for me, pretty simple. Like I said, it gave a perfect distribution. If you do have, like seconds time frame, you can definitely see the clean type one in there. Really, really clean. And yeah, it's just a shame that it came in right at news. There was really no reason for me to take it, during news. Spread would have gone to crap for me. So that's EU. Jumping over to GU. Now, GU is where I have a little different view on this, right? So for me, GU is in the middle of nowhere, right? We absolutely are in the middle of nowhere. And from when I look at this, I don't see a tremendous amount of buyers. I don't see a tremendous amount of sellers, right? So if I want to do anything, it's going to be up here. This is where I'd like to see price get up to really do something. For me to want to sell this, I'm not selling it from anywhere here. The only way that I would really sell anything is I'd have to wait, and that's why this alert is sitting here. I'd have to wait for this break down here, just because I don't have a real clean market cycle. I was fine trying to play the buys up, especially when we broke this high price. This is where I ultimately caught a buy yesterday, ended up getting taken out at Asian at reduced risk. But I like the move that we saw. And I would have liked to have seen price just continue to go higher up into here. As of right now, though, I mean, you look at market cycle wise, this super clean, right? This is super clean. And then we're stuck with this price action. So I'm not interested in trying to short GU until we break the low. And I'm really not interested in huge buys unless we see evidence of buyers coming into this market. So you can see where I'm looking at here. I can guarantee you that I'm not going to play an accumulation out of this, right? So we're in a 3-drive accumulation right now. I do not want us to sweep the low. If we do, it's not the end of the world, but I don't want to sweep the low. What I'd like to see is I'd like to see the accumulation confirm, and then ultimately us get a reaccumulation, which is what I will play. Right. I don't feel confident in the bottom, essentially, our first level of the upcycle, but I will play continuation move if we get the reaccumulation set. Once we get that, then I'd be more interested in trying to play this. But I can probably guarantee you that GU is going to be low on my priority list. It'll still be on my primary watch list, but it's going to be one of the lower ones that I'm going to be paying attention to, because I'd rather play something like like EU, like EG, like indices, AU, NU over what I'm looking at on GU. All right. And it's just because, one, we're seeing a really low amount of volume being traded on it, and just price action isn't as clean as I would like to. So if it ain't clean for me, I'm not trying to be aggressive with it. Okay. So that's my game plan on GU. On EG, what I'm ultimately looking for is sells, right? We've been looking for shorts on EG for quite a bit now. And realistically, this is what I'm looking for. So I'm looking to see, do we come back? Do we sweep out some Asian highs? Do we come back into the distribution part of our redistribution? We come back up into premium of that. I'm a seller. And of course, if we sweep this out, come back up into the 80% of the entire move, which sits around here, I'm a seller from here. So those are the two main ways I'm going to get in. The third way that I would get in is playing a redistribution. And that would involve, we accumulate here. And if price just redistributes ultimately without coming into an area that A, I can play out of, or B, not giving me some kind of price action to play, then I'll play mitigation of that. All right. So that's really how I'm going to be looking to play EG, but I am looking for shorts. I like the shorts on it. Everything's kind of lining up pretty nicely on EG. Bear with me. Let me ring. There we go. So that's EG. Playing the short game, looking to take volume off when we make our new low. All of these, that's how I'm really going to be playing it. Moving over to AU and NU, right? So have you guys looked at AU and NU the past week? Who is our leader, AU or NU? Who's been watching AU or NU? AU? AU's the leader? Yeah, I think so. So what I'm personally looking at, is coming back to play ultimately mitigation of this distribution here, which ultimately creates the redistro. All right. So I like AU. The fact that we don't have the mitigation on it makes it worth it. Yeah, 100% I'm looking for it. Obviously, no figure. She comes into the 80% of our UTAD. So now it's just going to be coming back to mitigate it. So 80% of the whole move, right, is sitting right here at 65.28. The 50% is where I have my alert at. So we get up to that 50%. Obviously, I'm playing price action to take this lower. All right. This is just the redistro. So in the event that we do go higher, I will play from higher points of interest. But realistically, I don't see a reason for this to go higher. So I may just sit back and play the price action out of here. On NU, it's going to be much of the same, right? So NUs are laggard. And what I'm going to be looking for is, there we go. So I like how we've got nothing but sellers in this market. I like the fact that on Friday, she comes in really nicely to our 80% of our manipulation. We have already seen a break of market cycle, right? The reaccumulation has been taken out. I really don't care about taking the low. Our leader's already taken the low. So what I'm going to be looking for this, I would say, probably won't see it tonight. Maybe this will be a play for Thursday night. Is I'm going to be looking for us to at least get to like that 6,100 level. 6,100 is right around that 50% of this entire move. So that's where I'm going to be playing. In the event that NU does not make the low, what I'm going to have to do is I'm going to play price action off of AU's location. So when AU's alert goes off and I'm watching what AU's doing, then ultimately I'll jump over to NU as well and watch them both, comparable strength them. And, ultimately the way that I'm going to get into an NU play is, realistically, AU is in a point of interest. AU is showing a distribution. AU creates a non-manipulated distribution, but NU does. That's how I get into an NU play. Otherwise, for me, the game plan is probably going to be to attack AU. All right. And then, of course, my management side of it is I'm going to be taking partials at the next low. And, ultimately, I'm going to be trying to take this even lower. All right. Nothing about this. You look at the Chinese data, nothing about this is really setting up for long-term bullishness. So realistically, let's just say from that 50% to my pretty much easy area to target is going to be 50% of this push here, which is going to be somewhere in the neighborhood of that. It's a 200 pip move is what I'm looking at for realistic targets. So that's how I'm looking at it. For me, it's a pretty simple setup. On AU, again, same concept. There we go. Same concept. I'm going to be looking for, let's just ballpark it. We're looking about 100 and call it 130 to about maybe 150 pip move is what I'm looking on AU. So fundamentally, we're being supported by a couple of factors, right? Chinese economy not really coming through with the anticipated moves. We're looking at continuation on the dollar bullishness, and then of course, we're looking at, from a soft currency perspective, anti per diem, the Australian and the Kiwi markets really suffering at the hands of what the dollar is doing. So AU and NU continuing to look to short. And yeah, again, bigger picture, if we end up taking these highs out, I'm just playing from here. All right. When you think about from a market cycle perspective, you still have supply and control here. This is just the lowest form of order flow. So that's my game plan with AU and NU, right? So really, I'm looking for some continuation on the dollar. If you paid attention to what bonds we're doing today, I don't know where they closed, but for the most of the day, they were sitting around 2.5% on the 10-year and the 2-year. And yeah, I mean, you could see we've been just screaming up on this ever since we've started to see the depreciation in the anticipated rate reduction going into March. So, I think Goldman Sachs has the handle on a June rate reduction. I think that's more in line with expectation. So potentially we can start to see potential short sellers coming in on the dollar, maybe around that beginning of May. And, it all depends on where we are location wise on some of this stuff, but, start to take into account, we're not accidentally in a price point at a given certain time. Everything happens for a reason, and it's a long-term setup that a lot of these traders are doing from the higher time frame. So AU, NU, that's what I'm looking to do. And let's jump back over here. Yeah, so bullish dollar. I'm looking for some shorts on EU, shorts on EG, shorts on NU, shorts on AU. And the only real way I'm going to short this is if we get the new low. Otherwise, if we start to see some buyers, I'll take a short-term buy on GU. So from a currency perspective, that's what I'm looking at. Anybody got questions on that? Or anybody have another currency pair that they're specifically looking at? Nope, nothing. All right, cool. That's easy. What do you think about gold? Nothing, bro. I have no idea what's moving the gold markets right now. Do you? I'm not really keeping up with the commodities markets. So I have no idea, man. Do you have an idea what is moving gold? Do you know? Same here. So yeah, no, I have no idea. I haven't been able to figure out. I really haven't been digging deep on it, but I haven't figured out in the last year what's been moving gold. So I just kind of stay clear of it. Cool. All right. Well, we'll jump over to indices. So we're finally getting a little bit of a pushback. I'm a little disappointed because I missed out on a 700 point move today, but looking back, there was absolutely no play whatsoever. None whatsoever. Let's see. So I did try to short yesterday, and I'll kind of show you where I tried to short. I don't know if it's still up there. Let's see. So I tried to short out of here yesterday during New York. It was at the highs of the day, and we did have divergence. So this was my type one that I try to short out of. We had divergence here where SPX and NASDAQ made the low. And I did take a sell stop plus a 50% entry. So when I saw the accumulation, I was kind of hoping that we would get something like this. But instead, she ends up running me through, and obviously, and then she just sells off. So I was a little disappointed yesterday, but it serves me right. It was a Monday. So I did give a Monday risk to it. So I wasn't too bummed about it. But coming into this morning, obviously the news comes out and you can kind of see my game plan. I was just looking for a redistro down. Everything for me told me that we're selling off. And yeah, it was absolutely no entry for me whatsoever. I was hoping for one of them to sweep. NASDAQ does take out the high, but there was just absolutely no entry for me whatsoever. So looking at, U30 and where we're at, I'm really not interested in. I know we've taken. Let me see. I know we've taken this low here, but I'm not. I'm not really interested in trying to buy it. Come on. There we go. I'm not interested in trying to buy indices at this current moment. What I'm going to be more interested in is if we end up sweeping out. Hold on. Clean this up. So we do have our type 1 distribution. Okay. So right now we've essentially just broken some order flow and all that. That's about it. If we, and I don't feel like we're going to find ourselves up here, but if we do happen to find ourselves somewhere in this neighborhood here, my alert's going to be right there. If we do find ourselves down there somewhere, I will be looking for some price action. Now, this is far-fetched in my opinion. I don't think we're going to see that in the next 48 hours. What I do feel like we are going to get is I feel like we are going to get a sweep of today's high. And ultimately, if we get that, it's really going to depend on where the other two are at the time. But I can potentially see us trading above today's high and then ultimately trying to distribute to sell off again. If that's the case, I'm going to have to make a decision on how much risk I want to throw into that and if I'm going to play that aggressive. Realistically, if during New York we find ourselves above here and I see ultimately what I saw yesterday, right? Some clear distribution up here in this area, somewhere right here, then I can almost guarantee you that I will play it aggressively to short it, but it's only going to be short term. I'm not trying to catch like 5,000 points on this. For me, this is just getting us down into some more discounted pricing. If we look at like what SPX did, there we go. So if we look at what SPX did, SPX definitely did a nice little sell off. We do have a distribution sitting up here, but that's it, right? That is it. You can see the divergence up here where I was talking about between that and U30. And same thing, like this morning, I was looking for a redistribution, right? Which we did get. However, we didn't shake out what I wanted. So, which was a little bit of a bummer. So you could see my alert sitting right above these highs. I wanted to see us do that. So do we have a distribution? Yes. And same thing, if tomorrow I start to see evidence of sellers coming in, I'm actually just going to move this right there. If we do see some evidence of sellers coming in, I will be looking for potential shorts tomorrow. So let's just say she comes into the 80, right? So we do have, let's see this. Yeah, so let's say we do have, all right, so that is our SC that breaks. So we find ourselves like somewhere in here distributing. I would even throw it like up into this 80, but somewhere in here, whether it's in our SC or up in that 80. So the SC would be somewhere like here. So we find ourselves doing something like this. I'll definitely be looking for shorts going into tomorrow and just looking at where the new low would be. I mean, we're talking, let's just say she comes into this 50. I mean, we're talking a 40-point move, you know. So sub 4 point stop loss, which 4 points on the S&P is going to be a large stop loss. I mean, you're already at a 1 to 10. So that's ideally what I'm going to be looking for in SPX. And then Nasdaq did sweep the high, just didn't give me anything to play. So yeah, so I did have my alert this morning set right above here. We did sweep it, but you can see there's no manipulation to me for me to get in. Maybe if we would have got the sweep and something like that, I would have played it, but there was no manipulation in that price action. So same thing, we've got, there we go. So we've got the distribution up here. We did get price to pull back. Ideally, bigger picture, this is my anticipation is that, you know, we're going to come back down into this area here. So that's what I'm kind of ideally hoping for. You know, where do I want to try to get into a short tomorrow? It's really going to be kind of dependent on where we kind of trade tonight, but just from a smallest form of order flow. I mean, that's the redistro. The high doesn't mean anything to me. So, you know, we find ourselves overnight somewhere here, and then a pre-market we end up distributing. That's where I'm looking now. The only sucky part about this is that's a 200-point move. So, I mean, that's well enough to give us that 1 to 10, and then just see how much I can let the ride go with a runner. But that's ideally what I'm going to be looking for on indices. Again, if we trade above it, it doesn't matter. Like, I mean, we could trade above the New York high from today and still distribute, and I'll take it. For me, fundamentals are telling me that we're going to continue to come lower. We just need to like manipulate some price. So we didn't really have any manipulation today. I mean, you can see there's absolutely no manipulation on either of these indices. There might have been on the Russell, but I know the Russell freaking took a beating. It's like 3.5% down. Worst day on the Russell, I think, in like decades. So, and it's the first time in a while U30 was down 700 points. So again, I was a little bummed that I didn't catch it, but you know, it is what it is. What's the current time frame for Frankfurt? I just want to highlight it's the hour before London Open. So whatever time frame that is for you, but yeah, the hour before London Open. So yeah, but that's what I'm looking to do. Like I said, I'm looking to short. I'd like to see where we kind of play out of. And you know, ideally, I do not believe that there's going to be any real catalyst for us to get up into here. I feel like on the point where we're getting up into yesterday's distribution, it's going to be in a bullish cycle to go higher. So indices for me are still going to continue bullish. There's really no data right now to support the bearishness. Now we start seeing that reduction in rates getting pushed further out, then so be it. You know, then that's going to be the catalyst for us getting price to come lower. So, but that's ideally what I've got on my game plan. You know, indices have been paying out pretty well. I shared last week, I think, but you know, indices ended up giving us last year a really nice year. So I'm going to continue to try to get these indices, and yeah, if I can work in an entry on currencies, I'll do so. So, anybody have any questions? Anything else they want to look at? Um, Give me 2 seconds. Let me just fill up my water. But if you got questions, drop them in the chart. I'll kind of go through it. All right, folks. Sorry. All right, let's do this. Let me start over here. So, can you take a look at one of the major USD pairs? Can you take a look at one? I am. Didn't I look at EU, GU, AU, and NU? Am I missing something? Can you take a look at one of the major USD pairs? I'm, I'm pretty sure I looked at all of them. I mean, I didn't look at UChef and UCAD, but what else did you want to look at? All right. With MT5 potentially getting banned for US residents, do you have any potential alternatives? Why is MT5 getting banned for US residents? Yeah, and my understanding is MT5 is not getting banned for US residents. Certain brokerages are getting banned because they are engaging in non-regulatory activities, I guess is what I would put it. Some of the prop firms were saying that, so I thought it was. What prop firms were saying that MT5 is getting banned for US residents? My bad, I got here late. Yeah, no worries, man. Yeah, I went through all the dollar crosses, bro. Yeah. These firms that are getting away from MetaTrader, they're getting away from MetaTrader because MetaQuotes has not given them a new license. The main reason they haven't renewed their license is because a lot of these brokerages have not paid the licensing fee in years. So I can give you an example like Hanko Trade, which is where I had some of my personal funds on. They were unable to, I guess, come up with the licensing fee for all of their due back due fees that were required. So that's why they're no longer on MetaQuotes. A lot of these other firms like Osprey FX, another place I had, they got away with because supposedly they hadn't paid the licensing fee for over 5 years, and it just wasn't something that they could come up with. So firms that are getting away from MetaQuotes isn't for any regulatory reason. It's because they just weren't paying the licensing fee. When it comes to, I think it was My Funded FX was one of them, but I could be wrong. Well, when it comes to prop firms like FTMO, I'll tell you right now, FTMO, I know a lot of you guys think FTMO is, I guess, one of the most safest prop firms. They're not. FTMO, TFF, any firm that has their own brokerage, like FTMO has their own brokerage server, if they offer, essentially, if they offer services to US clients, they need to meet the SEC regulations to act as a brokerage. And none of these firms can do that because they don't have, one, the infrastructure, and two, the the licensing and credentials to operate a brokerage. So that's why FTMO all of a sudden can no longer offer US clients. And I know they say, well, if you are a US client, like I have my one account with them, yeah, that's going to, I guarantee you that's going to change. Same thing with TFF, right? They cannot, if you are a brokerage, you have to abide by, certain SEC regulations and licensing. So that's what's happening with that. That's what got MFF in trouble. So, these firms that have like ACAP as the broker, ACAP is its own broker, right? They are licensed and regulated within the licensure, of, whatever jurisdictions. I honestly haven't looked at what all the jurisdictions are, but these prop firms that use like ACAP or a third party liquidity provider, they're absolved of having that regulatory because they're not offering an actual piece in the market. They're offering simulated funds. So has nothing to do with US clients. However, like I was talking about with like FTMO, the US is starting to come down on them. I can guarantee you're going to start to see the European regulatory body do the same. And what happens to FTMO when they can no longer offer services to European, like ECB clients, or to North American clients? I guarantee you that's got to be a good chunk of their freaking clientele. So A and B books. What about A and B books? From what I'm hearing from you, it's more that the prop firms aren't following the rules rather than the SEC just coming after them for no reason. Um, well, it's not that they're not following the rules. It's they've created, like take for instance FTMO, they've created their own brokerage, but they're not following the licensing and regulatory provisions to operate as a brokerage. And, obviously I wouldn't say that there's a big push for regulation in that kind of industry, but it's just something that for some reason it got the eye of US regulators. And that's once you're in the freaking spotlight, you ain't getting out of it. So that's what it is. So you were talking about does books, right? About A and B books? No, I'm not talking about A and B books, man. Nope. No, I'm talking about firms that have their own brokerage. So FTMO has their own brokerage. If you use you know, any of these 5 billion firms that have like 8 cap, they have 8 cap as their brokerage. They do not have their own brokerage. So same thing like TFF. TFF shut down pretty much everything they have and are now in the process of trying to move all of their stuff to a new brokerage. But if you trade for TFF, you got an email about it, and then you should have got a follow-up email saying that their server brokerage that they were going to kind of dropped the ball and they can no longer use them. So they got to figure something out. So it's kind of one of those like muddy water kind of situations, man. You just got to sit back, and honestly, this is why diversity is your best friend. So my TFF accounts, I've got 2 of them, are no longer being traded. Okay, so that's one of the 21 funded accounts that I have, or 2, I guess, 2 of the 21 funded accounts. So I've got 19 others. My FT01 for the meantime is not affected. But eventually, I know that's going to come to an end. They're no longer going to be able to offer services to U.S. clients at one point. So, and then who knows what's going to happen going forward? Like I said, once the U.S. is done with it, I guarantee you, European regulators are going to be next. So you're potentially going to see that they're no longer allowed to offer to European clients, UK clients, Canadian clients. That's pretty much going to leave some of the African countries and Asian countries. That's about it. So, but yeah, that's ultimately, where I see that kind of heading. But diversity is your friend. When it comes to prop firms, my advice is use and abuse them, and, when it comes to, dealing with some of these stupid rules that they have, just remember a prop firm's main mission is to make money. And the only way they make money is by not paying you money. So I've told, I've said it before where, I have certain rules. I don't try to get big payouts from them because anything over a $5,000 payout triggers a manual review. So I'd rather have just the automated stuff where, okay, I get a couple thousand here from each prop firm and I'm happy. Let's see. How do you manage all of those accounts? What do you mean? How do I manage all of them? I don't know. Yeah, I manage them. Organization, just keep it all organized. You'll be fine. It's also a business at the end of it. Yeah, exactly. You got to treat it like a business. They treat it like a business. You got to treat it like a business. Not every one of your product services are going to make money. And you got to, I could tell you, like I had one account that, man, I was probably like 7% in drawdown or something like that. So, what I did, I put it on the back burner. I copy trade it and I just put, like a 25% of what I normally trade on everything else. And before I knew it, like 3.5 months later, I was back in profit. Wasn't even worrying about it. So yeah, you just got to kind of let it do its thing. So cool. All right. Does anybody have any last minute questions? Because if not, I'm going to go grab some food, get some. I think I've got to be the Uber parent tonight. Volleyball is going on. So yeah, I don't believe next Tuesday we're going to have a call just because I am flying back Tuesday. And whether or not I'm home in time for it, I can guarantee you after being in Kansas City for the weekend and then trying to fight some of this weather to come home, I'm not going to be up for it. So, do you recommend any journal models? So I use mine. You know, the best journal you can use is the one you create. So I would, I have different kinds of journals, but if you're good with Excel, I would say create your own. Um, Nowadays, when I first created my journal, I had no idea about API data pools. Now, I can tell you that is huge. That's a lifesaver for me, where you can import certain key things already from your MetaTraders and utilize the data. So that would be my advice if I don't have a lot of experience with some of those like journals that you can find and pay for. All right, cool. Awesome. Well, listen, thanks for hopping on. I will catch everybody later. You guys have a good one. And yeah, I'll be in the charts.